Good morning, UPBOptionMillionaires.com. 20 minutes before the opening bell on this Thursday, October 26, 2017. I'm going to be brief, go over some charts and some setups here as we find S&P 500 futures up 0.1% this morning. Saw some unusual selling yesterday. The market was down big. We saw S&P 500 futures plummet after the opening bell. Now, we've been seeing the morning weakness, but usually gets bought about here or here. Not this far. Maybe the algorithms went to sleep, or they didn't boot up enough of the bots, or the share buyback programs are taking a break as we head into the earnings blackout. But if you look, the recovery started a little later than usual, but started nonetheless. Recovered up until almost the level that we saw into the decline yesterday. But look, here we are this morning. Bingo, we're right back at that level. Got rejected a little bit, but I do think the cracks are forming. I've been talking about this really for the last week and a half. Talked about it with FANG. FANG started to pull back. Amazon, Netflix, Google started pulling back on Monday. Momentum was waning late last week. We have small caps momentum waning. Also, yesterday with this decline, we've got NASDAQ triggering a nice momentum sell signal. All of these have worked good in the past for at least short-term downside. I know downside, you say? What are you, crazy? It has been very difficult positioning for downside. So if you don't like trading puts or trading for downside, maybe just sit on your hands a little bit. Let the dust settle. We'll get into some charts and I'll show you where I think is a good spot to buy. Well, let's start with stocks that have been soaring to record highs. Stamps.com. I know this is a big target of short sellers. Earnings reports next week, and you can see it continues the upside yesterday, even with the market crumbling. Stamps.com, shipping away. You do some research on it. It's pretty funny. It's pretty much a subsidy program that they're taking advantage of. The U.S. Postal Service, kind of just milking from the taxpayer subsidized Stamps.com, but new all-time record highs. Also, SHW are traded for downside for earnings. Not so much. Look at this move up to record highs, folks. The market continues to paint record highs, and so does Sherwin-Williams. Obviously, they are just paint, and they're doing quite well. The paint and the sticky note bubble, 3M, new all-time record high. Look at that move up, folks. And this, sticky notes and Tyvek suits and house wrap, yeah, doing very well since the lows of March 2009. So it's an everything bubble these days. And you know what? If everything's going up at the same time, is it really a bubble? Because all of the bubbles coming together, obviously there's enough space for all of them. So they're not going to pop anytime soon, right? So let's look at some charts. As I say, short term at least, I think this market's continue to record highs in the longer term, but S&P 500, ETF the spiders, right on the cusp of a sell signal. I actually had it briefly yesterday before the market recovered off its lows, but you can see momentum starting to roll over after this long duration here of just positive momentum. And when we get one of these rollovers like we did back in March, it takes a little time to develop, but it does ultimately lead to downside. And what's even better is when we get these momentum buy signals as much as we had last October. Remember, heading back, the S&P 500 ETF hadn't seen a red month since last October. And then when we got that red month, look at the move we had off the lows. We got a momentum buy signal. Look at this, at the end of August, momentum buy signal. So actually the buy signals work out, more robustly than the sell signals do, because ultimately a lot of the sell signals occur after a sharp decline. But if you look back here, let's just look on a monthly basis. You can see heading back, October was the last red candle of last year, and it's been really a tremendous run to grind to the upside. Let's look at small caps, because then we had the election move for IWM consolidation, the latest move out of September, and you were consolidating again. And if you want to look, we'll just look over with the daily candles. You can see we got the momentum sell. You see we're starting to pull back, drag down. Look like a nice flag. Look at this rejection here. But then I like IWM when once momentum turns and starts coming up as it did again at the end of August. Look at the move we had at the end of August. Look at the move we had heading into the election of last year. So you don't want to trade for downside. Wait for momentum to wane and start turning around. But I do think we're heading for downside here at about 146, 145 on IWM. And the NASDAQ, we got the sell signal. We have earnings for 20% of the weighting of the QQQ today. I believe it's Amazon, Intel, Microsoft, Google. So if you look, we're starting to pull back the momentum negative as much as we saw back in September. See the rollover we had. And remember in the summer, we were getting those big candles out of nowhere. What we looked at yesterday was reminiscent, eerily reminiscent of the sell-off we had in June. Remember, record highs, and then out of nowhere in the middle of the day, I think it was a Friday, a really sharp decline. Netflix was down 5%. That's what it looked like we were heading for yesterday, kind of a stick save. But again, momentum's rolling over, and that was just a crack. The cracks were forming there, and look at the lows we hit in July. So I think we're setting up for some sort of a pullback like that. Even if you draw a trend line for support, that's at least another $2.50 here. I know that's, gosh, that's like a market crash these days. I'm like, wow, that guy's calling $2.50 on a QQQ. But head to that bomb shelter. The world's going to end. But anyway, we're just looking for a short-term pullback. And look at bonds are selling off. And something I saw in the earnings reports that's popping up, you sort of with Whirlpool, higher costs. Not only that, some of the corporations like Sherwin-Williams passing those higher costs on to the consumer via higher prices. So we see higher and prices in the same sentence. What does that mean? Inflation. And you can see this head and shoulders pattern on TLT. Look at this. I brought this up, resistance line up. Previously, you can check my stream at Twitter. And you can see here, now we're heading towards a neckline. We hit this neckline. We're going to break down under the 122.50 level, possibly to support. And that would imply possibly higher interest rates in the short to medium term. And I think ultimately, we need to be watching, interest rates over the short to medium term as well, because if we're getting prices rising, interest rates start to rise. What does that mean for all these corporations that have utilized the cheap debt to finance their share repurchases? And if you look at in this year, I mean, a lot of the action that we've seen to the upside for the market has been the corporations themselves. They think they're so pretty, they're buying their own stock hand over fist at record high prices. Well, guess what? The higher the prices go, the more it costs to buy back the same amount of shares. And if they're buying back those shares via debt, well, it's going to cost more to get that debt to buy back those shares with higher interest rates. So you get the point. A little too much coffee here this morning for UPB at optionmillionaires.com. It's, just 17 minutes before the opening bell. I'm going to close it up here, but I do think the market short to medium term is at least setting up for a nice little correction here. And that's going to take down some of the big stocks that have been roaring to the upside. We'll see, though, Amazon, Google, Microsoft, Intel, all reporting earnings after the bell. We're going to get all four of them trading lower. That would be the four horse. I don't even know. They're going to come up with some term for it in the morning. But all right, I'll see you in the chat room at optionmillionaires.com. Everyone have a great trading day. Goodbye.